Hey friends, welcome to the Divorce Clarity Studio on WGSN-DB Going Solo Network Radio, Podcasts, and TV. I'm your host, Lisser, CEO and founder of LZL Coaching, a boutique coaching firm focused on divorce, relationships, and life transitions. I'm a former lawyer, a nonprofit leader, a Jewish educator, and spiritual counselor, and I built my divorce coaching practice using my life experiences as the foundation of all I do. On this podcast, I highlight experts who have their own divorce experiences, both professional and personal. Although each of our stories is unique, we share intrinsic commonalities. My goal is to raise up stories that let you feel seen, give you the inspiration to move forward, and foster the courage to stand on your own 2 feet. Ultimately, the Divorce Clarity Studio is here to help you feel less alone, more informed, and more aligned with your values. Today's show is titled Divorce and Taxes, What You Need to Know. I'm excited to welcome Patrick Wanzer to the show. Patrick is the owner and founder of Breakthrough Tax Resolution. He's a tax specialist with a concentration in divorce support. Based out of Indianapolis, he has over a decade of experience as a CPA and 10 more years as an IRS tax resolution specialist. Patrick has built his reputation on helping clients navigate and resolve complex tax issues. When he and I met, I knew I found someone who could offer support to people going through divorce. His practice focuses on empowering individuals to stand up to the IRS. And who doesn't need support like that? His vision is to guide clients toward financial stability. He's the author of several books, and the most relevant is Break Free from the IRS, Taxes and Divorce, a match not made in heaven. So, with all of that, welcome, Patrick, to the Divorce Clarity Studio.
Well, Lisa, thank you so much. I appreciate you having me on.
Oh, it's my pleasure. I think we all need to talk about taxes, even though it's terrifying for people to talk about taxes. You know, I did some research, and people are more likely to talk about their sex life than their financial life.
Oh, absolutely.
Taxes is like the most embarrassing piece of it, or it could be.
Absolutely.
So let's start at the beginning. When I interview guests, I always ask them, what's your story? How did you get into this work?
Well, it's funny that you say that, because I was an accountant for quite a few years and became a CPA and was having my own tax practice. And I thought I was just going to do tax preparation. It's the typical CPA firm. And so I'm doing stuff, and had my first season, and I did okay. But when tax season ended, I didn't have many clients. And so I'm like, I need to find another revenue stream. And so I found a training on tax representation. There was a 40-hour online CLE taught by my mentor, Eric Green from Connecticut. And, took that and thought, okay, this is interesting. And then a family law attorney, actually it was the law partner of my ex-wife, who referred a client to me for an innocent spouse claim. She's like, can you help her out? I'm like, sure I can, of course. Yeah, duh, of course. Knowing I had never done this before, but I figure, why not? Why not step into that and see what we can do? Met with her, talked about her case, prepared the innocent spouse filing. She was being sought after for $18,000 in tax debt that her ex-husband should have paid years earlier. He declared bankruptcy, got out of the tax debt, so the IRS is coming after her. We filed the innocent spouse. The IRS granted full relief from the $18,000, and then, because of the hold harmless clause in the agreement, we took him to court, sued him. I was the head witness, and she won my fees, so he had to reimburse her for all the fees she paid me to do that. And it was at that point I realized this is what I like to do. A, working with people going through tax issues and divorce, but B, helping people get past a strenuous, straining, scary situation with the IRS so they can get a fresh start and move on with their life.
That's amazing. I love all aspects of your story. Like, first, the first thing you mentioned, which you kind of smoothed over, was, you got a case from a tax partner of your ex-wife. Tell us
Yes.
about that.
Well, so when I started my firm, and this was my first firm, because Breakthrough Tax Resolution is actually my second firm. My first one, I started it, and my ex-wife and her law partner were my only client. I was an accounting client and doing that sort of work, and so I, had a good relationship with them. My office was just down the hall from them, and that sort of thing. And I was talking about, hey, I'm doing resolution, and she said, well, hey, I have this client for you. Said, fantastic. And so that's how that started. But I do so much work with the Indianapolis bar and the state bar in Indiana that, we still have that great professional relationship dealing with that because I focus so much on tax issues and divorce.
It's so important. It's vital for clients to recognize that you go into a divorce, you may not have had any responsibility for the financial side of your marriage. You might have been the CEO doing all of the executive tasks, the scheduling, the managing, the marketing, everything that's part of being a parent. And maybe your partner was the CFO, the chief financial officer.
Yes.
And, they were running parallel tracks. And so now you go through divorce. Now you have to be the CFO. And that's not a job you're comfortable with. And during the divorce process, you may not be thinking about all the things you need to know about finance when you're designing your agreement.
Yep.
So tell us how that all can work.
Well, so a lot of times, for example, I have a new client that we retain, and when I met with her and her family law attorney, she wanted to know if she can pursue an innocent spouse filing. I said, okay, well, let me look at your...
Explain. What is an innocent spouse filing?
Sure. So innocent spouse is a provision in the tax code that allows one spouse to challenge whether they should be liable for a joint tax debt of the other spouse if it was an understatement of tax or an underpayment. And there are certain factors you have to meet. One of them is, I didn't know or should not have known. Was there abuse? To whom is the tax attributed? And a variety of other factors. Okay. So this particular client I'm meeting, she wants to know, can I be an innocent spouse? So we have to go through certain factors. She's showing me the returns, and she said, well, my soon-to-be ex filed the returns, but forged my signature on all the returns. I had no idea he even filed them. And they have copies of the forged signatures, and the returns aren't even correct. And so I said, well, we're not even going to challenge it under the innocent spouse like we normally do. We're going to challenge those as invalid returns. You didn't consent for them to be filed. We're going to have the IRS declare them invalid and file returns for you. And you're going to take your $400 and some thousand tax debt that you have with him down to about $3,000 or $4,000, because if we file returns for you, that's all you're going to owe. Now, how her divorce attorney deals with the tax issue in the divorce settlement, that's on the legal side because the IRS and family laws are separate. It's a joint return. The IRS says, hey, you're both liable. If we file a return for her, this is all, but that's going to get the IRS off her back for that huge tax debt. And so that's how these things can work. A lot of times a spouse may not, the moneyed spouse has all the money. The other spouse deals with everything else. And so the non-moneyed spouse doesn't know what to do. And so we step in if there's tax issues. How do we get that resolved for them?
It's so interesting because I hear language about the moneyed spouse and the not moneyed spouse. And so often it makes the non-earning partner or the lower earning partner feel like they're not really a part of the relationship. And in divorce, marital property is everything that's been acquired by the marriage during the term of the marriage. So on the one hand, you're looking at what's shared. And on the other hand, you're looking at how to separate what's shared. And both parties are like at counterpoints because the earning spouse would want to be joint for tax purposes, and the non-earning spouse wants to be joint for equitable distribution or community property purposes.
Yep.
And they're actually arguing against their interests on either side.
Absolutely. There are instances where I may advocate for my client to, okay, you're going to take the tax debt and set up an installment agreement and pay it, and then have the other side give to you in assets his portion or her portion of the tax. But you know you're going to make those payments. You don't trust your other spouse to make the payment. He'll default. So I'll have you take the tax. And they'll be like, well, wait a second, shouldn't have to pay all of it. I said, well, that's where the other side gives you half of their, the money, or pays you monthly, or however it's set up. And then you are the one who makes the payments. And as long as you make the payments and you stay in compliance, you're going to be fine. But if the other side defaults, the IRS then comes after you. And so it's a counterintuitive argument. They're saying, I'm taking more debt, but it's a way to protect them because we argue for more assets to cover the other portion of the tax debt. But it can be a counterintuitive argument.
But it's also not something that people think about. The first thing people think about is, well, it's equitable distribution, which is kind of 50-50, or community property is 50-50. And now they're only talking about what's marital property and what's not marital property. Mm-hmm. And they don't really think about debt right off the bat.
Right.
Where it still is split 50-50. But what a perfect solution you just offered, where you take the whole thing so that you can ensure it's actually paid.
Right. And you are protecting yourself with more assets so it may be you taking 60% of the assets, but you take 60% of the debt. Now, the math is very quick and dirty there, but you taking more, but you're also taking more on this side. It overall equals, maybe it's 50-50, but there's a reason to do that. It protects you. Or should you file separately for the last year? This last year of the divorce, should you file separately? Should you file jointly? Do you don't trust your spouse? And so you file separately to protect your retirement assets from seizure from the IRS and that sort of thing.
That's really fascinating, because what you're sharing are creative ways to divide up assets and liabilities, especially when it comes to taxes.
Yes.
And so, so often lawyers, or at least 10 years ago when I was going through the process, they just wanted to split everything, right? It was let's make it half. You get half the house, you get half the house.
Right.
You get half the 401k, you get half the 401k.
Yes.
But maybe there was another way to do it.
Well, absolutely. And there's the instance where, for example, a client came to me referred by a family law attorney, and she told me the story of her ex-husband who withdrew $1 million from his retirement and invested in a crypto scam and lost all $1 million of it. Didn't realize that there's a tax effect on the withdrawals, a taxable account, and he's younger than 59 and a half, so there's a penalty. And she said, should I file married filing separately? And I said, absolutely, because you have $600,000 IRA and a $400,000 401k. If you sign a joint return, you're on the hook for that tax, and your assets can be seized. If you file separately, then your assets can't be touched for his tax debt. And she said, but aren't I going to pay more in tax if I file separately? I said, you are going to probably pay a little bit more in tax. And that's where we work with your divorce attorney to say, we're going to argue that the other side compensate me for the difference in tax because I had to file separately to protect my assets. So if I'm paying $1,000 more in tax, you need to pay that difference for me and argue that. But we had to do it to protect her assets from being seized because he invested in a crypto scam and then had an affair with the crypto scammer at the same time. And once it tanked and went nothing, she's gone. He's out the money. Nothing's gone. And then, but we had to protect her assets for that.
And that is vital. That is so vital, because when you're going through divorce, you want a fresh start, right? You want to have a platform on which you can launch this next chapter of your life. And if you're still being weighted down by the debts of the marriage that you could have negotiated a different way about, especially the tax penalty or loan or what you owe. I'm not using the right word.
The penalty, the interest, yes.
Right. Then you've got to get creative, and lawyers have to be able to see it. And that's where having a professional like you, Patrick, on board your divorce team can be vital for making sure you get the fresh start you need.
Absolutely. Here's a good example. Let's say you have a couple, they're getting divorced, they own a house. And if they sell the house, there's going to be a $350,000 profit. Okay. If they sell the house while they're married, they're entitled to a $500,000 capital gain exemption. So there's no capital gain. If one party gets the house solely, it's their house, they then sell it post-divorce, it's $350,000 gain, they're only allowed a $250,000 capital gain exemption. They're now paying a 20% capital gain, $100,000, that's a $20,000 tax hit. So the argument is, can we sell the house prior to the divorce, avoid that capital gain? And that's something where the divorce attorney is like, well, let's just split it. You get the house, that's fine, etc. If you're never going to move, that's one thing. But if you need to sell it, that's something to take into account that may not be thought of, during that negotiation.
So it's really interesting. So in my scenario, I got the house, but we never changed the language on the mortgage. And yet I'm thinking I still split the asset with my ex-husband after it was over, but there could have been a dilemma there in terms of what was my liability and what I could write off.
Yep.
Wow.
Yep, absolutely. And so it's the little things. And again, I'm not an attorney, so I don't wade into the attorney sandbox. I'll tell attorneys, look, this is what I wanted to say. You write it up with the legalese, but I tell it in layman terms. This is how I want it to be. But it's just those things. We see items around the corner that may not be seen by somebody who doesn't do this on a regular basis. Just like there are family law arguments to attorneys make that I may not notice and may not see because I'm dealing with just the tax side.
That is really powerful. And we are about halfway through. So we are going to take a pause here with Patrick Wanzer, and we will be back in 30 seconds. And we're back with Patrick Wanzer of Breakthrough Tax Solutions. So we've been talking a lot about innocent spouse, about fraudulent tax returns, about tax debts that need to be balanced out with assets you may not have thought might not look 50-50, but if you take into account the tax effect, then they are. So what would you say is the most important thing that someone going through divorce should plan for in terms of taxes, and what's the thing that most people overlook?
Well, the one thing that most people overlook a lot of times is making sure how to file their return when it comes to the end of the year. Sometimes people will sit there and they'll say, there's a phone ringing. They'll want to say, we need to file jointly, or we need to file separately. Well, there's a certain piece of the tax code where if the IRS considers you unmarried, you can file head of household. Okay. And so you're considered unmarried if you are separated and don't live with your spouse for the last 6 months of the year. Okay. So you're married, but you're considered unmarried. You can still file a head of household. And you have to have a dependent and meet the other head of household requirements. So I had a client come to me and she was have to file separate returns for the last 5 years. Maybe it was 22, 23, 24, and 25, last 4 years. And she was going to owe about $2,000 or $3,000 per year for those when she filed separately. But I asked her, when did you separate from your husband? She said it was October of 2022. So that means for 23, 4, and 5, we could file her head of household. Because we filed her head of household, she's eligible for the earned income tax credit. Because she's eligible for the earned income tax credit, she got about a $7,000 refund each of those years. So we turned what was a $4,000 or $5,000 tax bill into a $20,000 tax refund for her, just because we were able to file her head of household, even though she's still married. She was considered unmarried by the IRS. That's one of the biggest things people overlook. filing status, or just looking at what are some different ways that we can file these returns, do these things to get the best outcome for myself.
Yeah, and that's really what's most important. I want people to understand we're not avoiding the law. We are actually looking at the law and seeing, how do I benefit? Why is it there in the first place? Because
Right.
these different filing statuses are there to support people in different family roles.
Yes.
And that's something that is really important to think about. What is your role and how does that impact your filing status?
Absolutely. And that filing, and so people will argue against that, or they'll argue that they shouldn't file married filing separately. They're told the joint filing is the best position to file. You get the best tax benefit. And that may be absolutely correct. But with that one client that I had who had $1 million in assets that could have been tied to a $300,000 tax debt, it's best to file separately. And then we work with their attorney to say, let's argue, we'll do the analysis saying this is what her tax would be if they filed jointly. Here's the tax, file separately. Here's the difference. Let's argue for the other side to pay the difference because of their actions. We had to go this route.
Yeah, that's so. How often then does that party who essentially caused the separate filing come around? Because that might be a little hard to swallow for the person who doesn't want to be saddled with 100% of that debt.
Sure. A lot of times it can be used as a tool in the negotiation. Okay. All right. You know what? Because maybe they don't want to file they want to file a joint return. Why? Because I don't want to pay this tax debt. Your assets will be tied to it. So yes, I want to file jointly. Well, I want to file separately. Well, I'm not going to. Okay, well then I won't say, hey, pay me the difference. Use it as a negotiating tactic. Maybe that's something that could go on. But a lot of times, especially when people hate their spouse more than they love, I want to get out of it. They'll do things. They'll cut their nose, to spite their face, and do things that are not logical. So that can happen. But we talk with them and say, hey, look, this is the best way just to resolve it and move past it and get you to a new start. Our goal is to relieve the anxiety and get you to a new path, a bright future going forward, and not looking backward.
Yeah, that's really powerful, because so much of life when you're in the thick of the divorce is looking back and feeling resentful or feeling regretful or feeling like you missed opportunities. And you're stuck in that zone and you want to get payback.
Yes.
But what happens in your next chapter?
Exactly.
And it's more important to look forward instead of backward.
Yes, absolutely. And sometimes it takes them having to swallow the bitter pill of knowing, all right, I know I'm going to have to do this in order to make this work, but in the long run, it will work out. But most family law attorneys will put hold harmless clauses in their settlement agreements anyway, which is good because if the other side doesn't do their job, it can be taken back to court. One thing to remember is the IRS is not bound by a divorce settlement agreement. It doesn't care if you have a joint return, you both are responsible. If the settlement says spouse A will take the tax debt, spouse A doesn't pay it, the IRS doesn't care. They're going to come after you. Your remedy's in family court, not with the IRS. And so we then work with them and their family law attorney to say, hey, this is how we need to approach the remedy and filing a contempt petition in court to go after the spouse there. But the IRS is not bound by those piddly little state documents. They just laugh at them and chuckle.
It's so interesting because so much of our identity, so much of our life is tied up in our social status. And when I say social status, your status as a married or divorced person. And your social life is tied up in that, but your financial life is tied up in that too. We often say there are 4 divorces. There's the legal divorce, the financial divorce, the social divorce, and the emotional divorce. Mm-hmm. And all of them have separate impacts on the individual, both individuals in the couple.
Sure.
And, when we have to start thinking that we are no longer one financial entity, that can be a really emotional place to be. So
Absolutely.
tell us a story about a client who like had a hard time dealing with that separate status.
Sure. Was my first collaborative law case that I stepped into. And collaborative law is an alternative dispute resolution option in divorce. And I stepped in as financial neutral, and we're doing in this instance, it was a personal budget. And they spent, I'm going to make up a number because I don't remember, like $800 a month for food. And it was the husband, wife, and 2 children. And we're redoing the budget, and she didn't understand why I dropped the amount. She goes, I need $800 a month. I said, yes, but your husband is no longer living there and your children won't be there half the time. So the amount of money you need will be less. Well, the Greek chorus of all of her family telling her, you need this, you need that. She couldn't accept or understand the fact that the budget is just saying, hey, this is what we think you need, not you're not supporting 4 people every day anymore. You're supporting in essence 1.5 people every day. So we took 1.5 amount and said, work with that or something. And she just couldn't get past that. And it wasn't just that, it was everything. She wanted basically the entire budget she was living on to maintain for herself. And the other side just wasn't going to agree to that. So we had to work to try to resolve that. But that's an instance of where somebody they're so angry at what's going on, it's hard for them to hear the independent analysis stepping in and helping them out.
Yeah, well, I can see it from her position, right? She feels like this is what it costs to run my home.
Mm-hmm. Yes.
And there is no way that I'm not running my home the same way I did before, because the law says you should remain living in the style you've grown accustomed to.
Yes.
What she doesn't understand, and what many people don't, is that your life is changing and your expenses may actually be going down. And they're going down at least for the things that your co-parent would have to pay you for.
Yes.
And that's hard to swallow, because
absolutely it is.
Sometimes people look at division of assets and income and support as punishment sometimes.
Mm-hmm.
There's got to be a penalty. There's got to be a consequence for their cheating or their lying or their, failing to file taxes for 4 years. There's got to be a consequence.
Right. Exactly. And a lot of times, here in Indiana, when they do the child support worksheet, I had a client where he got divorced and he got full custody of his 4 children. And yet the child support worksheet said he had to pay his wife like $300 a week in child support. He has custody and he has to pay her. That's just how the child support worksheet went. And we filed an offer in compromise for him, and the IRS wanted to deny that. And I said, you can't. He's like, well, how can you pay child support if he has custody of the children? I said, I don't know, but that's what the child support worksheet says, and that's what the law in Indiana said. And so those are instances where, he could, because at first he was arguing, why do I need to pay this? And I told him, look, man, this is actually going to benefit you on the offer side. But yeah, that seems counterintuitive. Why am I paying child support if I have all 4 children? But his income was so much higher than hers that's how it worked out.
Yeah. And there's a benefit. His income is so much higher.
Well, right.
He has an income that the state says you should be able to afford this.
Exactly.
And that, for many people, is another thing that is a hard nut to swallow. What do you think most people overlook when they're thinking about divorce and taxes?
I think what they probably overlook is understanding the full tax picture, especially if one spouse did the taxes. Mm-hmm. Assuming that the taxes, were correct, assuming that they were filed, assuming that they were paid. And they overlook just thinking, well, that was already taken care of. We've never seen a bill. I've not gotten anything from the IRS. And that could be true. A lot of times it is true, but it's something to overlook because nobody really thinks about it. When you think of divorce, you think, okay, like you said, split the house. Do we need to quit claim it and then refinance it to get your name off it? How do we split this asset? Do we do a quadro to get this retirement account over? Those are the regular things you normally think about. but one spouse may not even know what the tax situation is, be blindsided by something, and they overlook it because they don't even think about it. I think it's already been taken care of. I was told I signed the e-file form. But they never saw the return. They never looked at it themselves.
Exactly.
So they just assumed the other spouse was taking care of it.
Right. But even if they looked at it, they might not have understood it. They looked at like the total number of income that year, and they looked at where do I sign?
Yes.
They don't look at all of the itemizations. It just is counterintuitive. It's like, that's too long a report. I don't want to read it.
Right. And at the time they trust their spouse. My spouse is going to do something that's wrong. They're not going to lead me astray. And then they find out afterwards that yes, possibly it was. So.
Yeah. So we're getting close to the end. What do you think, or the end of our interview just for today, what do you think people need to leave this podcast knowing? What do we need to know?
One thing to know is that a tax issue with the IRS is solvable. It is not something that you have to worry about. I'm going to lose everything. They're going to take everything. The IRS is this big behemoth. They're going to come down on me like a hammer, and I'm going to lose everything. That just isn't how it works. I often tell people that the IRS is actually pretty good to work with because they have specific procedures and rules you have to follow. But the only way to beat the IRS is to follow the rules. But the rules are so complicated, nobody can understand them unless you're working with a professional who does it on a regular basis. But to walk away knowing it can be solved, it can be, we can find a solution. Sometimes it'll take time and that sort of thing, but we can. And that once you start the process of resolving it, it's amazing how much the anxiety goes away. I tell people we sell anxiety relief. They come in the office, they're frantic, they don't know what to do. I haven't filed for 4 years. I'm going to owe so much. And then once we start the process, they automatically start feeling less anxious because they know they now have a plan. They faced it. And that's what we want them to know is we can reduce that anxiety. And, it'll take some time and it may be a little painful during the process, but we'll be with you every step of the way and we can get that done.
I love that. We are the anxiety solution.
Yes.
I love it because so much of divorce is anxiety. So much is you're living in a fog of all the things you don't know. And when you hire a professional like Patrick, you're getting the expert that you don't have to be. Like, I don't have to be a tax expert if I can hire someone to help me. And you may think that the lawyer is the tax expert. And some lawyers are, right, but it might not be your particular family lawyer. So that's why it's good to add a tax specialist to your team. So Patrick, thank you so much. What a great conversation. And you're so easy to talk to. I can understand why you are the anxiety reliever. Take two Patricks and call me in the morning. It's
yes, absolutely. And that's just the goal is let's just get it solved, move on, and let you start your new chapter.
That's amazing. So please tell my audience how they can find you.
They can find us on the internet at www.breakthroughtaxresolution.com. They can also call us at 317-218-4689. And either way, we have you can just send us a contact form that way. Set up a consultation, our initial consultation. We can talk through the process with you and see what issues arise. And we deal with everything tax resolution, not just incident to divorce. Anybody who's having a tax issue, we can help resolve that as well. But that's the best way to get in touch with us and help us resolve your issue.
Great. Thank you so much again. And for my audience, thank you for showing up for the Divorce Clarity Studio. I'm your host, Lisa Lisser. You can find me at www.lzlcoaching.com, and you can schedule a complimentary consult. Just go to that website. Until next time, I'm Lisa Lisser. See you again later.